Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Monday, July 22nd, 2019, and this is the Daily Report for Gold and Silver. Fractional downside moves in both platinum and gold and solid performances in palladium and silver are the defining characteristics of the precious metals markets as they traded for the first trading day of the week. We saw a continuation of that contraction on the gold-silver ratio. We will spend a couple of moments and talk about that because we did reach a historical level at 93 2 weeks ago, and then last week solid moves in silver, and the fact that silver outperformed gold took that to about 87 from 93, and that's interesting to say the least. Let's take a look at our current pricing. Traders, as I said, gold did close much closer to the low than the high of the day. When we pull up our technical studies today, we will look at a short-term 10-minute chart, and I will take you through the steps I took to add or initiate a long position in October gold. While that trade is against us, I do believe that in terms of this play, it's a very long-term play. We're out in an October contract with plenty of time to see the market recoup, and I do think overall, we will see this market recoup within a matter of days. Now, gold, as I said, it is currently down $15.70 at 426.10. That is a decline of about 1.1%. Silver also traded dramatically lower, down about 28 cents at 16.28. However, we did have palladium close higher on the day, gaining about $9, 15.18 is the current price, and platinum trading lower on the day by about $4.30. Now, interestingly enough, even with the rate cut, the dollar did take off, closing up about 0.5% higher, and that's because many market participants believed that it wasn't a 0.5% rate cut. It was less aggressive than many had hoped, and that was the reason for dollar strength. Although my sense is that will be short-lived. Traders, let's take a look at our technical studies. Traders, I want to start today's show off by looking at a very extremely short-term chart. This is a 3-minute chart. Each candlestick represents 3 minutes in trading. The other thing that we need to talk about for the setup itself is this mark here at 8 o'clock. That is Hawaiian Standard Time, the same as 2 o'clock in New York. So we can see immediately following the Fed announcement that they did cut interest rates by only 0.25% rather than what many had hoped at 0.5%, we saw an initial sell-off in the market. We actually saw the market trade to these lows right here before staging a recovery. The recovery happened over about a 15-minute period and actually took the market up and into positive territory. That is what prompted me to initiate a long position. Did we get in too early? Well, absolutely. The reason that I put the stop so low, and I'll show you on a daily chart, was to protect us from any kind of wild gyrations. However, I didn't think we would see the kind of sell-off that we had immediately following the way this market came back, because it came back strong with a vengeance. Traders, as we got into the trade, I sent the market recommendation out when the market was sitting at 39, 40, 41. Traders taking that call got in anywhere between 38 and 40, and the market did trade and sell off to a low. The low on the day came in at 1422.30. We saw it recover briefly, and this is when Powell began to speak. That would be 8:30 or a half an hour after the announcement, and his statements, because he had so many mixed messages, seemed to drive not only gold and silver lower, but also U.S. equities. All of them recovering and trading off of their lows, but closer to their lows than their highs. We then saw the market stabilize for a little bit and then recuperate as we went into the close. Traders, let's take a look at a daily chart so I can explain our stop placement and rationale behind that. Traders, we are looking at a daily chart. This is the continuous contract, which now is representing the October contract rather than the August, as first delivery notice went out today. And that is really where you get that shift from August to October. In terms of the stop that we put it in very loose in terms of risk factor, and we put it in to match the low that came in 2 days ago, meaning Monday, when the market traded to approximately 14.14, and that's why we put our stop at 14.13 and 13 cents. It gives us a wide swath in which the market can trade with some volatility. But as I said, my sense is that we should see the market recover, find support in this area, and begin to trade higher. My initial target, is still 1478. I think that is highly achievable. But what we first have to do is overcome 1443, 1442, that is this area here, and it does represent our current level of resistance. Traders, maintain your current long position, maintain your stop, and I will add one more thing, and that is that once we see solid support come into the market and some upticks, I will recommend for those that are able to actually add to the position to dollar cost average our entry price. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.